million. IPO comprises of a primary fundraise component of 9,500 million with a secondary component of 38 million shares aggregating to 20,926 million. Price band for the IPO is set for rupees 522 to 549. I will now hand over to Krishna to give you a quick brief on the business.
Thank you, everyone. I really appreciate you taking the time to visit us. Really apologize for the delay. We heard flights were never delayed here, but just but just want to introduce the company. Sai Life Sciences, we're a 25-year-old company. We operate globally. We have two sites, one in the UK and one in the US. We have been the fastest growing CRO CDMO in the last few years, growing at a 30% CAGR and 50% EBITDA multiple. We are probably one of the, I would say, the most prominent CDMOs in the last few years globally in terms of working on innovative molecules and discovery operations, both for large pharmaceutical companies as well as development companies, smaller biotech, which sell their products to large pharma. So we're involved in the entire discovery of new drugs from idea to commercial manufacturing. And so we are been really working very closely with these customers for the last 5-10 years. We have very long relationships with these customers. And the last few years, they've really expanded the number of services they do with us, as well as the number of projects they do with us. And that really reflects in the growth we've seen. And most importantly, if you look at our pipeline, since 2020, since COVID happened, everybody started diversifying from China plus one strategy. We've been significant benefactors of China plus one. We've added almost 15 late-stage commercial products from China in the last 3 years. And all these products will really grow in the next 5-10 years, all new products, patented products. So these will grow pretty aggressively in the next 5-10 years, so we have very good pipeline visibility. We have really created competitive advantages in most areas we operate in, be it our discovery services, development or commercial manufacturing services. There's nobody in India today which does all three services at this point. So that is a big advantage for us. Customers who work with us one part, work with us in other areas, so it's much more effective business development. And people, once they start working with us, they build very long-term relationships. And if you look at the market we compete in the small molecule space primarily. Small molecules today are about 70% of the new drugs approved, but there are three other modalities which are considered biologics but are primarily small molecule based, which would be peptides, which would be oligonucleotides, ADCs, which will also play a role. So we right now play a role over 80% of the discovery services market worldwide. And this market itself is growing about 9% a year and is going to continue to grow. India is just starting to grow in this space. So far, China has had the majority of the business, but with the change of global trends, geopolitics, with the change in government, we think the trend to, actually the companies have already told us that they are going to really expand India in the next 5 to 10 years. The feedback they give us is that China has worked with us for 15 years. We worked very hard to make Chinese companies good, but now we are committed to make sure in the next 5-10 years we build Indian companies to compete on equal scale with Chinese companies. They're making long-term commitments. This is not a short-term capacity planning exercise. It's a long-term strategic shift in supply chains, and this won't be overnight. This is going to take 5-10 years to grow, but the opportunity is so significant. India probably is maybe 5% of the size of the Chinese market in the CDMO sector, and that is going to continue to grow. And right now there may be 5-6 companies in India benefiting from this trend, and we are clearly one of the dominant players in this space. Our growth and customer base reflects that. We work with 18 of the top 20 pharma companies, which is a very substantial number of customers, and we expect these customers to really, a lot of these customers have been working for a long period of time, and they've all indicated that they're going to give us more business and want more visibility from us as to how we can support it. So I think we're very excited at this point because we think we've shown the growth trajectory is the right time for us to kind of think ambitiously, come to the market. Other important point maybe to really think about is that we see India as a country itself is going to benefit dramatically. Companies are not looking at a company, they want several companies to benefit from it. India has done this for the last 20 years, and what customers have told us is that we see that India has all the pieces to do it. It's not a huge learning curve, it's just with the right business, the right partnerships, we think India will be a very significant player. So I think the sector itself will benefit dramatically, and I think we will be one of the benefactors of the sector at this point. Anything specific you want to talk about?
So I think let's look to the numbers. I think if you look at the financials over the last 3 years, growth has been around 30% on an average. That is primarily on account of the whole strategy shift that we brought in to make ourselves much more competitive globally. So a lot of upfront investments in terms of adding, facilities in UK, US, to make sure that we create a global organization. If you really look at the CDMO market, China has played a very significant or dominant role. A lot of the dominance have come from the fact that they've been much closer to customers, near-shore facilities, UK facilities in the US. They're kind of used to leverage business back to China for larger operations. So I think that's a strategy that has played well in the industry, very, very similar to how IT companies have grown. Near-shore facilities in the West, followed by larger facilities in India. You look at any of the larger firms. So that's really the model we've kind of done. I think what we are seeing today over the last 12, 18 months in terms of a significant financial change is on account of the strategy and the work that we've done over the previous three years. So if you look at post-COVID, I think we've seen a lot of tech transfers happening on late-stage commercial products where companies are looking for diversification outside of China. And I think the government of India's policies in terms of making sure the growth happens across sector. There has been the PLI schemes that have been announced by the government. These have all helped the industries grow, and I think it is also creating a positive ecosystem. The Make in India program itself is something that is designed for organizations like us that use India as a facility to actually grow the global business, and so we are truly a Make in India organization from that perspective. What you've seen over the last 12, 18 months is all of these products that we have brought in or tech transferred into India will all start generating commercial revenue. The way we look at this business, if you look at what has happened, and we were putting a lot of focus on margins. If you look at from fiscal 23 to 24, our margins improved. We look at EBITDA more because in this business, EBITDA is a much more relevant factor globally. That's how all the CDMO, CRDMO companies are evaluated across the globe. If you look at the EBITDA margins from a 15-16% EBITDA in 23, we've actually moved to around 21%. Now, if you look at what we've done in first half of fiscal 25, which is the April to September of 24, our margins are around 21%. Now, this is almost 90% higher than corresponding margins for H1 FY24. So, business is, from a margin perspective, is seeing substantial traction, primarily because you're bringing in a lot of these newer products, which will then gain efficiencies. I think the one significant difference between a CDMO and a pharma company, and I'm sure all of you know this, is that we are this is a patented product. There's not somebody who's going to come in year 2 or year 3 and file another patent, and so somebody else can make this cheaper. You're part of a pharma supply chain, and you continue to remain in the supply chain. As long as companies are performing well, you're doing what you're expected to do. So I think this gives us significant advantages over a longer term in terms of growing our business. Look at our ROCE, return on equity. If you really look at what happened from 5% in 23, ROCE went up to around 10% in 24. If you actually do a trailing 12 months, because ROCE calculated over 6 months does not necessarily give the right picture. So if you take 12 12 months ended September 24, ROCE is already gone up to around 12.5%. That I think is just, in terms of past, how numbers are moved, how business is moving. Our confidence comes from the fact that we work with 18 of the top 25 customers, and pharma takes a long time to build relationship. And once they build relationship, they do not leave companies that soon unless you do not perform. Obviously, performance is something that the company has to continue to do in terms of R&D and manufacturing, but I think given that, and we've not lost a pharma customer, the last few years at all. So that kind of tells you that the organization is solidly built. We've had the best minds coming in. If you look at our management team, both in India and in the US and UK, we brought in some of the largest teams that you can build. Now, some of these costs have been incurred upfront because you need to provide that kind of confidence to customers. So as revenue kind of increases, some of the management team costs will kind of remain the same. So margins have a larger propensity to grow. That's the summary of what the business and the opportunity is.
Really build world-class infrastructure, world-class teams, and that takes a lot of strategic thinking in terms of not only finding the right people, find the right place to compete, and also putting the right infrastructure in place, thinking globally. But if you look at the results of that is why we're growing faster than everybody else in the market. That's why we're getting operating leverage. That's why we got the big customers. So I think where we feel good about ourselves and where we think the country will do well, because we really built world-class operations right now. We can compete with the best globally, supply the best customers. I really think we've only started the beginning of this. I think we have a 5-10-year journey of significant growth in this sector. It's not going to be only small molecules, it will be new modalities. So we will be much more intrinsically linked with the global innovation space. At the same time, I think as CDMOs will grow, India innovation sector will also grow. A lot of people are doing generics at this point. But as we have seen, if I go back to trend in China, first China started as CDMO, but they've become very big discovery countries. I think we see similar trends in India. So I think you will see a whole new ecosystem develop in India over the next 5-10 years, innovative drug-based ecosystems, which we've already seen with a lot of the Indian large pharma companies, larger companies getting there. So I think we're really excited because it's in front end of something, it should be a significant market down the road. But glad to ask any questions, anything you want specifics, operation in Boston to really make sure we have high-end biology, and we've duplicated the same high quality of biology in India as well, to make sure we have to globally. So when a customer comes to Sai, be it in US, Europe, or India, they see one culture, one approach, which makes a big difference for them. And we have a very large scientific pool, close to 2,300 scientists, which is one of the largest scientific pools in the country at this point. Again, we are just clicking back, put up a US FDA. We are a company that's always believed in doing this at a very high standard. We have a very clean FDA track record. We had 2 recent inspections in May and June, went out very well. We already have our PI letters. And we are always audited by a large pharma companies who are even more stringent than FDA. They have very high standards for safety, very standard for environmental sustainability. So we actually are fundamentally a very strong and safe company from that standpoint. In discovery, our biggest strength is we do what is called integrated discovery services. That is doing chemistry, biology, and DMPK. What that does is it makes it easy for customers to do everything in one place. They don't have to do something with us and ship it to somebody else. And this is where the future of the market is. A significant part of our revenue comes from biology and discovery services. And this is going to be a key differentiator for us going forward. The CDMO sector, we have 38 commercial molecules right now, 11 molecules in phase 3. And the big advantage of this portfolio is that everything is just in launch phase, so these have not even reached maturity. So we have so many products right now which shows significant growth over the next few years as they scale up and go commercial and penetrate the market. And they have long patent lives, good 10-year patent lives ahead of them. Again, this is just a cross-section of the companies where we operate. We primarily have modeled ourselves as Wuxi and Pharmaron, the two globally fastest growing companies in China. And so that is the role model. That's how we kind of built our business to compete with customers. So we really built our strategy to compete with the best of the best.
Yes. This is just a quick summary of three different pieces, which is revenue, EBITDA, and PAT. I think if you look at where the revenue is, and I'll focus on the first two charts, because I said this business globally is looked at from an EBITDA perspective. I think PAT is just, I'll come back to the PAT separately. I think if you look at the revenue, we had two broad businesses. One is what we call discovery business, the other one is what is called the development and manufacturing business, or the CRO and the CDMO pieces. The CRO business is around 1/3 of the total revenue, and the CDMO business is around 2/3 of the total revenue. On the first, if you look at the first half, we've continued to remain at the same, we are around 57-43 in terms of percentage, but it will broadly remain the same. If you look at the EBITDA, what we've done, we were around 131 crores of EBITDA in fiscal 22. That has actually moved up to around 300 crores in fiscal 24. In terms of percentages, I think fiscal 24 closed at around 21% for the entire fiscal 24. First half of fiscal 25 has shown a EBITDA of 21%. That's a 90% growth, in terms of CAGR from the previous half. Now, if I really compute the trailing 12 months, as I mentioned, we are around at 25% EBITDA. So EBITDA is growing faster, and that's been the focus in terms of restoring the margins. I think the next point that we want to kind of bring to you is actually the PAT. I think if you look at where we are, I think we did 28 crore PAT in first half as compared to a loss of 13 crores in the prior half. I think one of the significant things that had happened starting the second half of last year is actually a lot of the projects that got tech transferred from China into India started commercial manufacturing. And once you start commercial manufacturing, utilization and your cost ratio comes down, which is why starting second half of last year, our numbers have started looking better, margins have trended better. Now, layer in the fact that I mentioned this, the first point that we're going to utilize the funds. What Amrita brought in terms of the total issue size, 750 crores of the total 950 crores we are raising primarily is going to reduce the debt, which would actually make our debt very, very insignificant. If you look at debt as a percentage of revenue for fiscal 24, roughly around 5.5% to 6% of the total revenue. So now, once the debt reduces, my PAT will correspondingly increase less, of course, assuming taxes will take 25% out of that, but then the balance number will come back and hit the PAT. So this will be a significant contributor once interest costs come down. Depreciation will continue to be there, but I think, it's an investment we've made. A lot of our investments have been in the recent past, which would continue, and we will have to do the depreciation under the Companies Act. But I think from a cash perspective, this will completely change in terms of the amount of cash that is being generated in the business. I think the second point that I wanted to touch, I think this is about how do we maintain our balance sheet. A lot of effort has gone in the last 18-24 months. Working capital days was around 204 days. This was at the end of fiscal 22. And some of it was an account of impact on account of during the COVID time, pharma companies stopped R&D because they could not do clinical trials, patients were not available. So a lot of projects were stopped halfway, which kind of impacted our inventory days, our working capital overall.
Being a fully integrated player, end-to-end, working with all the large pharma companies in the fast-growing company, I think it's clearly demonstrating that we are one of the leaders in the market, being a specialized company. Again, we're the only integrated service for scale right now. We have world-class manufacturing plants and R&D facilities. Almost all our infrastructure is less than 5 years old. We have a lot of life ahead of them, and they really compete well when customers come visit us. They really see us as a differentiated company at that point. Like Shiva mentioned, I think our profit metrics are improving, and as the operating leverage of the business, of the investments we've made, continue to get leverage out and the business grows, I think we will see much better margins going forward. And again, India as a country is going to do very well in this space in the next 10 years. I think it's a sectoral bet.